Welcome back. You're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. It is a snowy Saturday, but I don't mind it as long as you're driving safe. I like to snowboard, so I'm hopefully going to be hitting the slopes here maybe over the weekend. We got a lot going on. A common thing right now is if you see a home that you like, do not hesitate. If you are looking to purchase, if you're looking to refinance, lock your rate in. You do not want to be caught looking because they are going to change at any point in time. We're first week in February. We got, W-2s coming in. It's tax time. Something that I think is important to touch on for you self-employed borrowers. Yes, we know you make $200,000 gross. That's great. But when you do your taxes because you tax yourself, we're not looking at what you gross. We're looking at what you net after all your deductions, after you pay whoever you're going to pay. We're looking at your net. So what that means is if you're making $200,000 and you wrote off, you had a bunch of write-offs, and now really after your depreciations and things like that, you're left at $30,000. Well, guess what? That's what we're going after. That's what we're looking at as far as what you're going to qualify. So that affects your buying power. So give us a call right now so that way we can look at your financial spectrum from the start to the finish. Because if we have to take your 17 and 18, and right now that average doesn't work, well, maybe we need to talk about what you need to show as far as documented income for 2019.
Right. Do everything on the up and up the right way.
Yes.
But yes, there's ways that we can, and there are things that we can add back that you do write off, and there are things that we have to take as a deduction. So, but that's walking us through. We have clients that call us right before they're looking to buy, 4 or 5, 6 months before, saying, okay, getting ready to do my taxes. What kind of income should I be showing to make sure is what I did last year going to be okay? Should I show a little bit more? Is it okay if I write off a little bit less? And we run that analysis for them because we want to put them in a position to succeed, not fail.
Right.
So exactly. Based on our last caller, I got a text that's right here. Thanks, Frank, for texting me. Basically, what a texter's texting me is, hey, listen, buy in the wintertime. Buy in the wintertime. Because people think, whether it's true or not, that you're going to get a better deal in the wintertime. There's less competition, and everybody's going to be selling their house in the summertime.
Yep, exactly.
So buy in the winter. My position is buy when you can buy when you're ready to buy, and if you can pull the trigger now, because A, rates are great. If you see the house that you want, buy it now.
As you got to think as a buyer, you got to remember it. Every seller thinks, not every seller, but a lot of sellers think the same thing. It's spring, so I got to add another 5% or 1% or 2% because it's spring, because there's flowers outside. They're going to want more money. And buying now is I mean, it's a great time. The wintertime, definitely.
Yeah, do yourself a favor. Do not hesitate as far as if you're looking, like I said, if you're looking to buy, refinance, like I can't stress it enough because right now the economic conditions are very favorable for interest rates right now. And it's just adding to more buying power, which is also increasing decreasing the inventory. So right now there's more buyers than there are homes out there. Mm-hmm. And when you have a lot of competition, and even in the winter, it's a great sign. It makes me feel good that, we're in this kind of environment, but don't be out there thinking that you have to wait till March, April, May. Call us now, 248-539-9797. Call us at Capital Mortgage Funding. We are there all the time. We're here to help guide you. And even we were talking about self-employed borrowers. If it doesn't work and you're not going to show enough income, let's talk about maybe doing a cosigner, a non-occupying person that could go on the loan that's going to help you. That seems to be a common theme. I actually have several where, I have some, their student loans, they're entering in the workforce. They have all this student loan debt. They can't make it on their own. So they have a parent that's willing to go on the loan with them as a non-occupying person that can help them achieve their home ownership goals. Let them get their feet underneath them a little bit, and then we can also later on remove that non-occupying cosigner from that loan.
There's a theme to this.
Yeah.
Yes.
Today there's a theme, and I'm so glad that everybody's listening out there because you just be prepared. It will help you out in the long run big time if you're prepared.
And know your options, right?
Know your options. Knowledge is power.
Yep.
Right. There isn't one way for everybody to do the same thing. There are options out there, and you need to explore all your options. And the onset of the show, okay, you talk about going to a specialist. John talked about a bank situation. We love banks. If there weren't banks, we couldn't be in business, right?
Right.
But we're specialists. We don't do car loans, boat loans, checking accounts, savings accounts. We don't do that. All we do are mortgage transactions, so we have to be really knowledgeable and we have to be really diverse in what we know and the product offerings that's best for our borrowers to set them up for success. And I don't think anybody does it better.
That's exactly why I use you folks and refer everybody. I had a similar situation a month ago. We closed 2 weeks ago tomorrow, or Monday. And unfortunately, it was a similar bank that John was speaking of earlier. And, we want people to be happy and enjoy the experience. Buying a house is an unbelievable experience. It's freedom. It's great. I mean, it's the greatest thing in the world you can do. But she had an experience at the 11th hour that changed her opinion about how that went. Not with me, but with the bank. There were things that were
unfortunately,
changed.
you're associated with that bank now because the episode happened and you were involved.
An underwriter basically doubled her down payment at the 11th hour within about 5 days from when we were supposed to close.
I can't believe when I hear stories like that. I
And
can't believe that's real.
I can't either. And the bank is local here, but they have branches across the country. And this particular gentleman was in California, and it was like an arm's length thing. And it's really unfortunate when things like that happen. I myself, and I know the entire team at Capital Mortgage Funding, we don't want that to happen. We want people to enjoy the experience.
I hate surprises.
Yeah, exactly.
I like
surprise
surprises
party.
as long as it's good surprises.
Yeah, no surprise party.
Yeah,
Right.
no.
All right, let's go to, we got a caller coming in. Dan, how are you?
Hey, how are you?
Morning.
I was calling because I heard you guys mentioning refi and the rates and everything, and I've heard
Yes.
it quite a bit. I'm a new homeowner, I guess. I've been about 3 years in the home, so I have not much equity at all. But I'm still paying PMI. The original loan was an FHA. So what kind of options do I have for refinancing with little equity? How does that play out?
I mean, well, we're definitely gonna want to look at the credit, and I'm gonna research we'll research the property value. But if you bought about 3 years ago, depending on where the area is, but there's been a steady, increase in home values. So chances are you probably do have that equity that you're needing to get out of that FHA loan into a conventional loan, most likely. What was your rate at the time?
I think it was like 4.125, I want to say.
4.125, is that what you said?
I think so, yeah.
Okay, yeah. So that was pretty par for around that time for an FHA mortgage.
That's still a good rate.
Yeah, it's not a bad rate. Anything that's in the low fours is a great rate. However, rates are a little bit better.
Yep.
And considering, maybe once we get rid of that PMI, whatever you're paying in that upfront MIP, it might even be we might want to look and put you on a 15-year or a 20-year, depending on what your overall goals are.
Yeah, Dan, you can be looking too at appreciation, to 3 to 4, 5% a year if you do the averages,
Especially
across
out
the
in
country.
Brighton.
Yeah.
And I don't know what you put down, but you may be able to get out of that PMI for sure.
Well,
Yeah.
here's even if you can't get out of PMI right now, here's the benefit of doing something now versus waiting. One, the rates are so good on conventional. So let's just say worst case scenario that we can get you into a conventional loan at 4%, the same rate that you're at, 4.125. Why is that beneficial to you? Well, one, the PMI might be cheaper on a monthly basis than what you're paying right now, and two, it's getting you into a loan where PMI will drop off when you get to your 20% equity. Currently, your FHA loan right now that you took out 3 years ago is for life.
Yeah.
So you're
So
never
Kingdom
going to
Come.
get out of the PMI.
Yeah,
Forever.
it's on there for the life of the loan until you lease pay it off. So I think that's a great call, Dan. We're definitely going to be reaching out to you. We're going to talk about the different options, but obviously we're going to give you our opinion, but you will be in the driver's seat. So we got to just make sure we're getting you in a product that makes the most sense for you and your family.
Got it.
All right, thanks a lot, Dan.
Thanks
we'll talk
for the
to you
call.
soon.
Thank you.
Dan.
We just got a ticket text. So someone was asking who pays for home inspection and sewer inspection. I think that is a great topic, and it's you. So if you're trying to buy a home, you need to invest in yourself and you need to hire professionals. Yeah, your mom's, dad's, brother, sister's cousin might know someone that used to look at things, but are they going to go in there and are they going to look for mold? Do they know what they're looking for? Can they take a scope and can they look in the sewer line? So that is money. Normally it's around $400 or $500, between the two, but that is money that you're investing in yourself on your future home to make sure that it has good bones and a good foundation that you need.
Just make sure it's properly worded in your
Yeah.
purchase agreement.
Yes.
And it's
give
something-
yourself the contingency.
And before we
the
go,
option.
and it's something you want to invest in. It's a great
Yes.
insurance
Absolutely.
policy.
Best money you
Do
can
not
spend.
waive it ever.
Best
Never.
money you can spend.
Becky Ellie, awesome job.
Thank you.
Did wonderful. Great show,
Great job.
guys.
Thanks,
Everybody.
guys.
Yes.
All
Be
right.
safe out there.
Yep. For Becky Alley, Harry Glanz, John Cole, Noah Heidman, thank you for tuning in. We'll see you next time.